Hello and welcome to the stream. This is Tradespotting live stream, your opportunity to ask me about anything you might be looking to trade over the next while, and I can give you personalized trade setups and feedback on the tickers of your choice. We're going to begin today with you guys letting me know in the chat box if I'm actually live and you can hear me, and a little bit of news. We'll start with PayPal, Apple, Microsoft. We'll check those charts for potential direction and the likely next levels of support and resistance. And we'll have a look at anything you want to see. Thanks for those notes. We're live. Thanks everybody for letting me know. And welcome to the show. Rolling. Got a new member. Thank you very much, Chris Sweeney. PayPal. That's PYPL. Facing mounting challenges on multiple fronts, particularly now from Apple's strategic inroads into the financial services sector. PayPal's Q1 2023 earnings report showed some positive developments, but these were all overshadowed by trends raising serious questions about the company's future prospects. Revenue growth hit the $7 billion mark, just over, merely scraping by consensus estimates, but active accounts decreased by 2 million on a quarterly basis. Sorry, active accounts. That's what it's like though with PayPal, eh? Pardon me. This marks the first such decline since 2014. The impact of these new wins and share gains among their enterprise level customers diluted their take rates and margins. This is a scenario far from ideal for a company like PayPal. The growth also casts a shadow over the company's future margins, with pressure from expansion in Braintree and mix. It's all surpassing expectations, but being overshadowed by these problems with competitive inroads into the main area of PayPal's market share. And it leads to a deteriorating competitive advantage for PayPal, which is their main selling point. Apple's strategic expansion, on the other hand, moving into the financial sector, presents competitive threats to PayPal and huge opportunities for Apple. In its latest offering, a high-interest saving account for Apple cardholders, developed in partnership with Goldman Sachs, makes its entry into the US banking deposits market. Now, this is really big news that isn't hugely hyped and probably won't take on the level of interest in YouTube and the markets commentary sites as it will in terms of the impact it's going to have on these things we trade. A seemingly modest venture signifies a really broad shift towards financial services, which will soon encompass leading lending products. And it will position Apple as a direct rival to PayPal. The new savings account, with a competitive 4.15% savings rate off the bat, might not considerably affect Apple's bottom line. They're a very big company, but it's an astute maneuver leveraging Apple's colossal install base to infiltrate the lending sector and undermine PayPal's main market share. Before the savings account announcement, Apple unveiled its Buy Now, Pay Later service, Apple Pay Later in the US. Apple Pay, despite a slower adoption rate than other services after the launch in 2014, now stands to challenge PayPal's dominance in the digital wallet market, especially with its growing popularity among smartphone savvy users in the US, who more commonly now using their phone as a payment method, which has been very popular in Europe and Asia, and a trend that's ahead. The rest of the world seems to be ahead in America. In light of these stark differences in size and financial power between PayPal and Apple, PayPal's market cap currently around 74 billion, and Apple's is 2.72 trillion last I checked. It's clear that PayPal is up against a huge behemoth Therefore, after a little bit of careful consideration, PayPal might be the counter trade to the long on Apple, the hedge that manages that downside risk alongside the trade for the opportunity that you're looking for in Apple. Obviously, the time to take each of those trades might not be at the same moment. We will check the charts later. Microsoft, we can't mention PayPal and Apple without a look at Microsoft, have a variety of businesses and opportunities that are currently leading the way in the market, such as the Windows operating system. I think it's 74% market share with the Microsoft OS, and Microsoft Azure, the growing cloud service, which has a good chance of surpassing Amazon Web Services that's focused on AI. In addition, the company owns LinkedIn, which is a very popular professional social network with 930 million members. 930 million members. And they're integrating AI into many of those products exceptionally well over the last quarter. In quarter three for the fiscal year 2023, the company beat both its top and bottom line estimates, and its stock price has increased by over 26%. They've got really solid financials. We're going to take a little bit of a deeper dive into Microsoft now and that earnings report just to talk about the solid numbers there. Full disclosure, I'm long on Microsoft, have been for a while. I've traded it many thousands of times over the last couple of decades. So they've got very solid financials. Microsoft reported solid results. Revenue $52.86 million, beating analyst forecasts by $1.83 billion. Two significant moves there. A 7.8% year-on-year increase, or 10% on constant currency basis. The standard growth rate has slowed down substantially, but the slowing growth trend may have troughed and could start to turn around. That would mark the start of a new growth trend, and Microsoft very much a growth and value stock. So the cloud now, and Microsoft Azure, the cloud market share. Microsoft's intelligent cloud segment has been the main growth driver with 17% revenue reported, 21% on constant currency basis. That's huge. Microsoft Azure has a 23% market share of the cloud market now, and they've made great inroads. I can say personally from my own experience that they reach out well to and deal well with entrepreneurs in a way that Amazon Web Service don't. And that's partly to do with Microsoft's long-standing customer service when it comes to integrating their new products, something that other companies light years behind with. So Microsoft's intelligent cloud segment looks like it could end up being slightly larger than Amazon Web Services, with its cloud business growing at a much faster rate. Assuming the current trends sustain, Microsoft's cloud business is likely to surpass or at least match AWS in the next few years. The growth in the AI industry could help accelerate Microsoft's cloud growth again. And having invested $10 billion in OpenAI, the fastest growing application of all time, AI could help accelerate Microsoft then. They're reported 2,500 customers for the Azure OpenAI service. That's up 10x from the prior quarter. So if you're not looking at that, you're not really looking at Microsoft. Valuation model and forecast for Microsoft, the cloud business growing rapidly, AI focus, massive edge over the competitors. Assuming current growth and trends continue, cloud business is going to surpass AWS. The stock price is up over 26% since early 2023. The future looks bright for Microsoft, and it remains an attractive investment opportunity. Let's get into the charts and check out where those opportunities begin and end. Thanks very much for everybody being here. If you want to hit that like button, if you're getting value from the show, that would be appreciated. Let me get the charts. There they are. And what's this? Oatly. That's Oatly. Pardon me. Just bear with me while I quickly check this, because it's the head of market open. It's the first time I've done this show right now, head of market open, and I have got things set up myself personally. So, pardon me. Okay. So we'll start with Microsoft. We'll start on a 4-hour time frame where you can see that clear uptrend, and you don't need to see my trades. So you don't need to see that. Kieran's Ghost, $14.99. Chat about Canva today? You betcha, Kieran. Well, you just stuck in the donation there now. We can go straight to it. We haven't really clacked on anything yet, so we can certainly look at Carvana today. And we've got it opened up on the 4-hour time frame, which is quite high if you're looking at electronic trading. Go to 15 minutes, and you can see 3.18 closed at 3.15 yesterday. That was a 10% increase. Huge moves up. Huge moves up. Go on to the regular trading hours. Check it on the daily time frame. Again, you don't need to see my trades there. A lot of them. Oh, they've been very good. Right, so you're at the 200 period moving average approximately. You're on the way towards a previous high. You've most recently put in what could be considered a higher low. If you should exceed that most recent peak, then you would be able to retrospectively call this a higher low than the previous area. Let me stretch this out. It seems as though I'm giving up a lot of screen real estate here to make simple points. So this is the recent trend on Carvana. Putting it in context, you've been in this downward sloping, a quite relentless downward trend. Carvana, of course, for those who don't realize, are a car company. The way their USP and main selling points is the convenience factor. So you can buy cars on your phone. You can buy cars from buildings that are the same as vending machines, and you just swipe your card, pick your car, and it gets delivered just like your crisps or your Coke can would in a vending machine. Bump, and then you it's like stuck on the little spinny things, and you have to shake the machine to get your car. No, so yeah, you can buy cars from vending machines now, or on your mobile phone, or on the internet, and there's a convenience factor there that you don't necessarily get from many of the other large car companies. The in-person experience can be off-putting to some people, and it's the same way. When mobile phones started, people thought, how's that going to work, right? No one's going to want to use that. Face-to-face is where business happens. And then it turned out that actually business happened on a phone where you couldn't see the person's face and you were still wearing your pajamas. And now that's the same with Carvana. You want to buy your car wearing your Y-fronts and nothing else. Carvana's the company for you. There's also other opportunities in that type of business model where they can bolt on other services at the point of purchase, such as insurance, which was facilitated by Root. And these are very complementary companies in that sense. So Carvana, it's been making a very strong down. It's plummeted since it's launched. And partly the reason for that is that it's a very difficult nut to crack, the car industry and car sales. So it takes a lot. It's capital intensive, and your competitors will spend you into the ground to capture market share quite commonly. So it can be the sort of business that when you're starting, you need a lot of strong partnerships and a bit long runway ahead of you. Carvana didn't have adequate of either, so they had to use their wiles and ways to create an opportunity for themselves in the market, and it took a long time. Price getting absolutely hammered since those peaks. It came down in this linear trend. Subsequently, we broke that and moved to the top side and put in this peak. And now this is the area to beat, having come from these lows. It's only when this price action exceeds this previous high that we'd be able to determine this low as a higher low than this previous low. That because lows and highs are judged retrospectively when the subsequent has been printed. So if we create a higher high, then we're able to go back and say that most recent low was higher than the previous low. If such times as price action finds itself up towards these highs in around $20 on Carvana and fails, then comes back down again, say, then this wouldn't necessarily have been a higher low, right? This would have been a high, and then we would have put in, you know, this higher low, and then this price action would have been a higher high, or again a higher low. It depends how you're looking at it. I'll skip this point, right, and strike what I just said from your mind, and we'll go back and make it easy, right? You got the low, you broke out of it, you had this distinct point in price action when you broke the trend, you went up and created this high. Subsequently, you came back down and found this low. That was a higher low than here. But you're only able to define any of these areas that price action has since retraced to as higher lows, higher than this low, or the previous one, when you put in highs, right? It's highs on the other side. So you have to go above this high and put in a higher high, and you'd be able to say this high is higher than that high, at which point we can tie off the idea of the lows because we've created a high. So we tie this one off then and say, well, where is it? And in relation to the previous low, which itself is only existent because we've managed to tie it off with a higher high, we can say, well, it's lower than this most recent one. So our most recent high low exceed the previous, and as such we have a trend, and that's what we're looking to do on Carvana now, right? So I took a long way around explaining that. That's a scenic route, but I am Scottish, so it's probably well worth it. So you got that trend challenge, and that is yet to be decided, and as you can see here, it's very possible that these support and resistance zones persist. This is clearly support. You've had a number of touches of it, you went through it and you had a little bit of congestion in price action, you subsequently came back, retested it, found support, retested it, found support. So if we're to take all of those drawings off and leave it just what we've got here, put on a horizontal ray to mark out where price action has been trending sideways so far, and it's this first line. Oh, I've got so many lines. This first line, which we'll define with this green line because it's support, and we'll make it 4 so it sticks out 4 thickness. And then we've got resistance, which currently you would have to say that the most significant level of resistance isn't around this prior peak. You look left and you can see that we reached a golden pocket retracement. That's the Fibonacci level here from the ultimate peak to the lows, which I've measured out using this Fibonacci. At least I certainly hope so. Let me check. Is that the lows? Come on, Fib. Yes, this is the low. So that's the 236, 382, 50% retracement, and the golden pocket where we've made it to on our most recent price actions peak. So this would be resistance, and as you can see, we've already got a horizontal line marked in there and we'll make it red. So price action then, so far until we know different, will be ranging between these levels. We can say that perhaps it's not as extreme as this high because your 200 period moving average has, subsequent to its most recent test, that was that peak, come down again. So maybe you'd be looking at that and saying, well, we could take our resistance down, and we could say that this would be where we find our most likely next test. Having departed from the golden pocket, we might look for confluence and take it to, say, that 50% retracement on that Fibonacci. And now we find we have a clear level of resistance which matches the body closes of previous peaks in price action. We have the 200 period moving average at that area. We're confluent with a 50% retracement, and we've got support marked underneath along with the trend identified. So we can now base our trades under those circumstances, knowing that if price action drops below this level of support, this whole idea is crap. If it breaks above that level of resistance, you're above a 200 period moving average on a daily time frame, and you're creating an uptrend, and that's the potential for huge significant moves. So if you want to trade this thing and you're looking for a move to the top side, you could take it with an entry breaking resistance, or a break resistance and retest this important 200 period moving average, which is a very common event because we use the 200 period moving average on the daily time frame as a proxy for our trend. So if we create the structure of an uptrend, we retest it and then confirm it with a 200 period moving average test. That might be the ideal entry on a bullish move on Carvana if you're looking to break to the top side from here, and that would be a breakout trade. If instead you're looking to take this as a scalp, you might be looking to buy it at support, which would be down here at $7, and then just to get rid of it in around the highs there at 14, or even on this move to the top side, you can see that previous peak. That would be a good area to reduce risk. And the truth is, when you're trading scalp trading or you're just trading a sideways trend, you never really want to actually buy here and sell here, because it always could be this breakout trade we talked about, or it could be a breakdown. And you can see I also have a level of support marked here. And so you don't actually want to buy it on these extreme moments, because instead you can just wait till it recovers one of these midpoints within the trend, at which point you'll be able to say that it likely goes to the next midpoint. So you would buy it here and you would sell it here, and you'd take it from 8 and you'd get rid of it at 12. That's a 50% increase, right? So if you did that once with $1,000, you did it sell and shorted it here. Once it confirmed after the peak, you sold it long before it peaked, and then it came back down and you didn't buy it at that peak. You waited until it broke the previous level of what could be potential support, knowing then that it was coming down to the bottom. You didn't wait till it to reach that bottom, because you never know where it's actually going. You saw it go through a midpoint, watched it go to another, and said, I'll take profit at each. And then you did it again, right? So $1,000 times 50 times 50 times 50, right? You keep doing that. Keep doing that. Do it 20 times. You'll probably get 5 in this one trade alone. You'll be a millionaire with $1,000. And that's what we talk about with regards to Carvana at this point in time. So much value. Thank you. You're welcome. Thank you for being here, Lepton. It's appreciated. Every minute of watch time helps me and the channel, and helps us all together achieve our goals. And if you're new or you've been here for a while, I want to change the world. I want and need your help to do it. So every second that you're with me counts. Carvana, that's looking at it all on the daily time frame. If you're looking at this and you're talking about tiny intraday moves, you maybe want to be aware of those bigger time frames. The 50 simple is above the 200 on the 4 hour. You've got a gap below here, coming back and testing those $7.40, 7 spot 40. That's very possible, but in doing that, you'll have to break this 200 period moving average again, having put in what is potentially a rounded bottom with bullish reversal divergence, bullish continuation divergence at this most recent low. So to be clear, this is not reversal divergence. It is continuation divergence, if you consider that an uptrend, and we would do that as we distinguish it with the lower low on the RSI, i.e. the momentum to those pushing down. They try really hard, but they don't manage to exceed the previous lows, so the momentum is divergent there from the reality, which demonstrates a weakness in the short position. So we perceive price then test to find where true resistance is. So we see it moving to these levels. And with this gap below, with the nature of 4 hour gaps, it may well be then that the probability of breaking this resistance on the first pass is reduced. So down at the lower time frames, you could say that it's ambiguous as to the long-term trend. On the smaller time frames, we're going sideways. And your objective as a trader is to identify where and what is continuation and trade for continuation of the trend. That trend is sideways. The probability and risk is high that on the first pass it would break this level. Therefore, the biggest probability in your favor is that this would be a rejection and price would come back down. So from here, intraday time frames, the best trade opportunity presented by this chart, because of its price action history, is a resistance level short that manages your risk really, really tightly. You do not take it at the peak. You wait till it's topped and running back down. You can see your target is either the bottom of this gap, the top of this gap, the 50 simple, the 200 period moving average, the 4 hour support level in at around 10, and you take that when it breaks in at around 12.50 with a retest on that level. Should it break down very, very fast and get in there on a retest, you've got an area to manage your stop at the previous peak. You've got an area to enter at the resistance levels where price likely finds some interest in your trade, and then you've got a distinct area where if it breaks down, the trade is on. You take profit at 10, you take it again at the top side of that gap, and you close the thing when it fills it. And that's the best trade that you could take in the short term on Carvana based on the 4 hour time frame and the risk that's presented at the minute. But the truth is that I've identified this long term as something that can have a very, very strong move, counter to the long term trend and with huge potential, which adds extra danger when you're shorting this. So you better be managing your risk. That the best opportunity long term might be actually a long on this thing, and in order for it to happen, it will need to break that resistance. So we go back to the breakout trade. Is that the best opportunity? Is that the one you want to wait for? Because you don't have infinite capital, and every opportunity comes with a cost, and that is that you can't take others. So how do you want to approach this trade? What's the best possible result for you and your account when you make decisions? because that's the decision you should be making. Not some shitty, half-arsed, well, it's not there yet, but there's something else coming. I can make $10. I can make $10. And then you lose it all in some fucking idiot trade because you didn't have the patience. You didn't have the self-discipline because you didn't focus on how important it is what you're trying to do here. And you and most people, and I'm speaking to everyone here, will underestimate the long-term, underestimate the short-term harm that you can do with impatience and a lack of self-discipline, and massively overestimate the long-term gain, short-term gain from gambling. So what you want to be doing is focusing on the right way of doing things and then doing them properly. And if you follow the technical analysis course I've put across at www.technicalanalysis.school, you will always have the rules available. So that's the resistance. Long term, you've got a lot of opportunity, and I think you could do big things on Carvana. 30-minute time frame, it's already making these moves. I mean, you can tell by looking at the charts, I've already got loads of different trades on this thing going. So, you know, 30 minutes there, you've got bearish divergence, you've slipped out of the bullish control zone, but it ended the day. A lot of people were taking risk off. You're going to need to see how things are during the opening range. If you're looking at trading Carvana, it could well be that there's a bit of volatility in that first 45 minutes, first 60 minutes of the day. If you're looking for opportunities to take it to the top side, I'd still be waiting for a retracement. If you're looking for opportunities to take it down, I'd be waiting for it to find resistance, peter out, momentum to give you the signal, and then to take that trade back down again. Very wary of the fact that it could break at any moment. So let's go across back then to Microsoft, and I'll double check and see if I've missed anything. Whoops, that's the wrong Microsoft. Yo, Nick, great to see you. Yo, Freeze. Yo, Fire Marshal Bill, thank God you're here. Yo, Rich. CC's Ghost, Def Banana Freeze, Wiki Wilkes, Leptin, Kieran. Thanks so much, everybody. Tubes, hiya, buddy. Thanks so much. Easy Hunter, good to see you. Leptin, 22 months. Look at that, eh? 22 months. Be like Leptin. Theo, yo, buddy. KT, great to see you, mate. Thanks for everybody being here. There's a message I missed. Don Quixote, King Jamie. Yo, Donkey. Thanks for that, Kieran. Really appreciate it. Hope you're doing good there down under. Right, so looking at Microsoft, 312, 310 pre-market. Oof, look at Tradespotting's talking about it, so it's been dropping. It's been dropping the pre-market. Stick on the regular hours just to see what that extended, just to see, like, that's no big deal, whatever. Yeah, so why is that little dot there? Get off, man! Right. So this is stupid 15 minutes to get out of that, man. Right, so, and then upcoming earnings on my shut up, IPCAR. Right, so weekly, as if, like, hey, it's IPCAR, you're not going to tell me anything, don't know, right? So, here's the, pardon me, back to the show. So Microsoft, weekly time frame, 50 simple above the 200 period moving average, price action above them both, positive slope, positive splay, and we've most recently tested that 200, really strong test at the RSI, at the lows, the sort of area where you would expect to find Microsoft a good buy is when the RSI on the daily time frame or the weekly is in it around the bearish control zone, right? The bears are in control. Well, no, not necessarily. I know that's the name. But the point is, this is a scale measuring momentum. And when it's at the bottom, then that momentum is at a low. And when you compare it to the trend, you would say, well, the trend is in a permanent fucking uptrend. So when the uptrend, you're waiting for opportunities. The opportunity will be when, well, no other people are buying it, right? That's all the way, you know, that's another way of describing momentum. So, you know, buy at the lows, buy it when nobody else is buying it. This is how it works, right? And you find a stock that is still going to go up. And it's Microsoft. It's just so easy, right? Isn't it? Let's think about it, right? When you think about it like that, it's easy. And here's this opportunity then. So it was also a 200 period moving average retest. That was a 50 simple. That was a 50 simple. This was a 200. You know, it gets easier and easier. Here's another one. There's another one. And it gets really easy. And I've traded all of them, made loads of money, and it's a big deal, right? So that's how you do that. Here's the other idea. You look at this, you see that the wicks here pushing back below the bodies of the previous low, and then the body of this most recent low closes back above those previous lows. So that's the definition of a higher low. You know, you're testing into these areas and finding a rejection of traders rejecting the idea that price will close in that zone. That's a weekly time frame. You're getting significant confirmation there that this is back to a positive move. So since then, that's why Microsoft has done well. up 26% from the start of the year, as we talked about in the headlines of the show there. There's 40%. Yeah, but it's since the earnings and stuff, right? I actually wasn't looking at the chart when I was doing it. I was looking at other things. But, you know, it is. There's the low there. And it's this trade. And I should have been aware of the 26% because most of that's my profit. Right, so you're looking at the 50 simple, you're back above it, and whoop-de-doop-de, I'm not trying to show off or whatever. You know, it wasn't a huge position. Anyway, the point, right, again, you've got a gap here because it's such positive reactions to bullish news and bullish conditions as a really outsized impact. Exceeding the previous highs, exceeding the previous lows, 4-hour time frame. Your gap, closing that would take you below the 50 simple, but not the 200 period moving average. Therefore, if we do find a little bit of weakness and the idea that maybe it is struggling to break above a resistance level, then you would go back down to support, test how strong that is. Because if there's a lot of appetite to buy it at the previous level where everyone was interested in buying it, then it'll likely return to that again. The next test then subsequently would be that prior high where everyone was selling it or not eager enough to buy it. And at that retracement down, you get a test. At that retracement back up again, you get another test. And those two tests will be compared against each other to look for who's going to win, right? And typically on Microsoft, those people who are short are quick to take profits at these retracements. So it's likely that you'd be in good company buying it long if it's at a good opportunity. And you can see that recently these have been determined to be so. So this retracement, we can update this now and say what would constitute a 236. Let's take this not from my trade, but the low within the trend and this rounding low. We can see that looking left, you've managed to reach these previous peaks in price action and fill this gap. That was an important gap on a 4-hour time frame. And in order to do that, you've filled others. You've obviously exceeded this previous high. You've gone through this gap, filled it, which was left open. You've left this gap, filled this gap in the guy, this dude, all of these, and then on the like little retracements, you know, even this guy, you filled these gaps. The reason I'm making this point is because when this thing starts trending, it doesn't typically leave gaps behind, right? Like, as I just showed you, it's like there's none. So here is a huge one, right? So the risk is that Microsoft does what it's nearly always done, and it does it again. I know it looks amazing. Look at that, right? How can you not look at that and think, wow, right? Well, I mean, you could look at this and think, no, right? But it didn't. So this is the way, right? Don't convince yourself of things. Just wait and see what happens and play the probabilities. And as you can see here, the probability is that at some stage it wants to fill that gap, you know, at some stage. So you'd have to be justifying an entry that didn't use that gap in some other way with some other logic that was more convincing and more robust than this has always done this. So good luck with that. Right, so this is a 4-hour time frame, Fibonacci retracement. You can see that you're at this most recent peak. If you were to come back down and fill that gap, shit, sorry, I have to answer this phone call. Hello? Yep. Yep, okay, sorry. I'm on the internet doing a live show, isn't it? Pardon me, super sorry for the interruption. I'm back. So Microsoft, a little bit of a gap. We see you've got a 236 that would be within the gap, so you could move into that area of low liquidity and find a level of support, trick a lot of people and not completely close it. So I'd be aware of this potential opportunity around 285 to 287. I can say that the previous low there at 276 is very important, and that fill in the gap is actually very close to that area in at around 278. So if you are to come back and fill this gap, and with the 200 period moving average being so proximate to both, it may well be that the buyers here look to that and say, well, this is a better opportunity for me, so I'll take it there should we have a momentum signature that says that it shouldn't really have dropped this low. Or they might wait. So the two opportunities then might be here, or it might be here. The top side within the gap, counterintuitive opportunity there, or here, a test of the 200 period moving average beyond a gap fill and the prior higher low, which would be again counterintuitive because we've just put in higher highs. So if you just see that retracement, it would be the sort of thing that would catch a lot of people off guard, but it would be totally natural because a lot of people would be taking profit at these areas. A lot of people would look to this as a buy. And if you're looking at this as having already put in a little bit of divergence, which it has between these two most recent peaks, then a test of support would be totally natural, especially when you find it at long-term resistance as you do here. So test back down, one that makes significant gives significant confidence to bulls subsequently, would be one that takes it counterintuitively lower than, say, the most bullish retracement. That would be just to the 236 here. If you actually instead come back down to a 382 or a 50% retracement, or even something as far as a golden pocket retracement here, it's still a much higher low than any of this. It's still put in a higher high subsequently, so you've got a low, you've got a higher high, then you come in anywhere in and around here, be a higher low, and this is what you're looking for on Microsoft, higher lows. And if you get that, it's a long-term trade and it's very good. If you're looking for something tiny, you've got the 15 minutes post-market opening giving you a little bit of a gap. Even if it is coming back down, first 45 minutes, 60 minutes, you might be looking for price action to make moves into that gap, depending on what it is that's driving price action during the opening range. And with the markets not being open yet, I think that the best place to look to would be in at your futures, where you can see the reason that you're seeing a little bit of a drop back down is because here, the E-minis to trade these are open a lot longer than SPY. You can see market open at the minute, 4137. That's a massive drop down from the 417 area it was when I was up this morning looking at. You've got this reaction towards the 200 period moving average on the tiny time frames, and still things pushing back down again. There is very little appetite pre-market today on Thursday, and that's interesting because obviously Friday, tomorrow, week expiry, open interest will be driving a lot of price action then, and theta will be mad on people's positions. So I would expect opening range to be interesting today, as it is every day. Right, and I also wanted to show you my beautiful face because it's amazing. Hit that like button. It very much deserves a like button click there. I actually wanted to get over here to the maximum pain, but I'm aware I've got lots of Microsoft accounts with similar URLs, so I didn't want to accidentally tip one in and stuff I shouldn't be showing. Right, so let's look at SPY, and we'll look at the open interest expiring tomorrow. Is the point I'm making. The put to call ratio 1.59. So that's because there's is that right? Yeah, so stop being stupid, website. You're legit right. You're right. It is right. It is right. Okay, it is right. So it's still 1.19. It's still the same deal. Still the same deal. But the deal is that loads and loads of puts, right? So there's loads of puts. So open interest is all short. So the open interest is all short. It's all go there on the phone. So open interest is all short. Yeah, and what is the highest peak? 411. So if price action is below 411, then those who hold these puts are incentivized to close them because they're expiring on Friday. They'll be worthless if price action is above 411, and there's always a chance that'll happen. Plus, its theta's gone mad, and it's the opening range coming. So what'll happen is if price action is below 411 on SPY, which is 41, anywhere in the 41 somethings on the ES, but we'll go SPY, just make it easier, because That's the open interest on SPY splitter. Right, so yeah, 411, there it is, right? 411.68 in the pre-market is 412.85 at close. And so pushing down to those levels, right, where pre-market, it's not the same as the open exchange trading. It's an auction system, and certain people have all the power. And if they want to push the price to there so that it's straight at open, they can close lots of positions and tie off that open interest. That's exactly what they would do, literally exactly what they would do. And so there it is, pushing to those levels. The opening range could be very interesting. We'll see how market sentiment looks, and we'll see who the big drivers of price action are. But so far it looks like it's going to be volatile and really dangerous for anybody committed to a decision without any flexibility. So again, caution is what the buzzword I'd look to there. And if we're also looking for a little bit of volatility, then it might be interesting on VIX. What have we got now? Market open 1779. We said it was 1777 on last night's show. This morning, pre-market show. Did you see it? It was brilliant. The pre-market show. Geez, wait a minute. I'm going to have to start rethinking, because they were pre-market shows, and this is a pre-market show, live show. If you haven't noticed, I've started this new series of pre-market shows with everything you need to know ahead of your trading day, and here I am doing another one. I'm confusing myself. Right, so this thing is pushing to the 200 period moving average there on the 1 hour time frame. 30 minutes, similar situation. It will only be the same situation everywhere here. 1 hour, you've got the 50 simple approaching the 200 price action. You know, it would have to move back up again on VIX in order for this to cross, and that would speak to SPY breaking down much lower than 411, 407, 404. Like, so if this pushes up to, say, for example, 20, SPY will be persistent at 411 or lower, 409. If this then pushes higher to 22, then SPY will be down at 407 or 404. And if this VIX is breaking up to 24, 27, SPY will be coming back down below 400. So that's a quick thing to look to. In terms of the tiny, itsy bitsy tiny time frames, you know, you're above the center line on the RSI here, and price action is at the low ebb of its overall range. If you were to draw a rectangle around that, you'd see you're in the bottom half, while as the momentum's pushing in the top half. So it would speak to weakness in this thing, because it's in a downtrend, and it's like resting on this level of support, and you can see how many times that's proved to be an area for a bounce. But does it really change the trend? Not in this period of time. It has never done so. You have to be making these huge moves back above the basis line, and that's speaking to 22. So again, it's saying in anything to change, to be a significant structural change to the markets and all the charts that we're trading, you'd need to see SPY back below 400. You know, so this is the reality of what all of these different tests that price is going through boil down to. Is it above 400? Then things are fine, and they've a chance of being really good. Is it below 400? Then things aren't fine, and they've a chance of being really bad. The way you can take that is a little bit further is by looking at VIX and seeing where it is. Is it at the low ebb of this channel? Then things are probably all right. Is it pushing back above the basis line towards the top side? Things are very dangerous. I'm eager to make these shows as accessible as possible. The technical analysis, I want to make that approachable so that people who arrive and are watching for the first time don't find it to be intimidating or at a level that they can't yet achieve, because I have other ways of explaining things, and I have infinite patience with anybody who's keen to learn. So never feel like you can't ask me. If anything's misunderstood, I can explain it in a different way. I won't just repeat myself, and I'll try and make myself heard for your benefit. So if you are confused and you are new, you can always let me know. And there's also helpful people in the chat box who'll give you a good take on things. Highest call open interest is 422. The highest call open interest here, 420, and then you've got something at 422. You have other things here, but the highest call open interest closing on today is in at around 410, which is why the volatility, and I mean, I say the volatility, I can't draw on this thing, but like it would be bouncing then between 404 and 420. That would be very, very unlikely all in one day, but this would be the extreme levels. And then you've got the 411, 410, 412. Like, this is a tiny little gap. If it exceeds either of those levels, then very, you know, like it'll go to the extreme side. It may not even exceed then, you know, 410, 414, that could be the range because, and we ain't got to get any of that volatility. And if you break outside of 410 or 14, then you could see that volatility because 404, after having lost this second node, you know, that would suggest that much of this open interest potentially didn't buy to close. And if it exceeds 404, then you'd be getting these guys on as well. So that would be dangerous. Whether that all happening today or tomorrow is probably ridiculously unlikely and like stupid idea. But then similarly, you know, it's an uptrend. So you can't say the same is true of 414. It could easily push above 414. And it was there yesterday. So probably, you know, so this is it, right? If it pushes above 414, volatility. If it pushes below 410, volatility. If it pushes below 404, fucking crazy. But then it might actually just be caught between these two levels. Is this today or this week? This is today. All right. So, and then this week, yeah, 422, you're right there. Highest of all open interest. 420, not all that different. And then 416. So a lot of resistance then at these levels, and aiming for 430 now, be very ambitious. 418 to 420 is the resistance level on SPY charts. And then again, highest open interest, 410, 400, 380, with 400 being the peak. But it's good, like, I mean, this has been the case for weeks and weeks and weeks. Like, this has been the case since November, December, that if you add up all the there's no danger that they're all getting, they're all closing in profit. And this is why, right? Because they are aware of the fact that it's so highly unlikely. They have to buy long to cover in case it goes up a bit, which means that you've got open interest here too. And the open interest that's bought to cover a short, which is going to expire worthless, you can't necessarily discard that the same way you could one open-ended position. You can't just get rid of your cover because it's in profit. That's not what it's for. It was never to generate profit. So it causes this congestion, right? And it means that even when there is a long position, it's likely somebody short that's got it. And it's shorts driving price action. It's that way for ages and ages because they're the ones that are trying to control the trend. Or otherwise, price would float up across the board with the state of inflation and whatnot. There is JCC in the chat box. Hi, Jamie. Is this really a late night show or a really early incoming one? In the US, there was a fashion for marathon dance couples, and the winners were the last couple standing. Hey, you dancing? You asking? They made a film about it called They Shoot Horses, don't they? Oh, yeah, that's right. That. You must be exhausted. Well done for never giving up. Thanks, Dad. Love ya. Boom. Hope you're doing good. Hope you're doing good, tired Dad. Yes, so a little bit of change of scheduling, as I'm sure you've noticed. So we'll still have to work on it because obviously I don't know, you know, lots of responsibilities and I don't know what I'm doing. I've also seems to have somehow managed to get myself 2 pre-market shows. Like, I'm sure that's not what the audience asked for. But we'll see what happens. Right, so price action there depend by the open interest. Looked at the charts and we covered all the fundamental analysis too. We really got that one, didn't we? We knocked out the park. Is there anything I've missed here? There probably is because I didn't even open this, Windy. Recent events. Come on, recent events. Load up, for goodness sakes. Guitar outside. Have a coffee on me, not a macchiato. In this economy. Thanks so much, Guitar. Paul, fuck yeah. Prez. $30. Looks like MULN sold 250 vehicles and getting some pre-market action. Thoughts? I'm guessing to stop being an idiot. MULN. I can't believe I missed that. I'm so sorry. Here, we're getting MULN up, Prez. And then, what else did I miss there? Nothing there. Right, okay. MULN sold 250, getting some action pre-market. It's up 5% pre-market. In the face of other things pushing down, I suppose you would say that is okay, interesting, notable. With regards to market structure, it hasn't done anything significant, and obviously, you know, that's a little bit of a warning sign on the RSI pushing so high and price action failing to do anything significant. Back to the regular trading hours where you'll be making your decisions, and MULN selling 250 cars, like a whole 250. Like, did they actually have someone count? It wasn't like 200 or 225. It was an actual 250 real cars. That's amazing. Because I think I could have sold 250 cars this morning. I think I could have. If I just had a car garage behind me, I think I could have sold 250 cars this morning. Even if they were shit cars, I probably could have sold them. But that's good. That's positive news. And a lot of people like MULN, so I like MULN because people like MULN. And if they're selling 250 cars, that's freaking good, man. And like, if you're hearing this, MULN, I'll sell your cars for you. I'll sell freaking shitloads of them. Right, so here we've got the MULN. That is so exciting. MULN, 146 pre-market, 139 close. What does it look on a 4 hour? So we're real life. Yeah, so we've already drawn in things here. This looks like... well, it's made it to the first one. Yeah, right. What? Oh, they've had a split and whatnot and moved all my drawings. Oh, no, this is so confusing. They've moved my drawings on the split. Can I select all drawings and then move them all at once? It wouldn't adjust properly anyway due to the logarithmic nature of the charts. I'm so silly. What did I miss there? Oh, I missed it properly. Jamie, what was it? Sammy, yo! I've been quiet, but not gone. And you, Jamie, are always appreciated. This dream is gold, and you're the best. Thanks for never giving up on us learners. I think they call you farmers. Well, we mean much respect, right? So, I mean, all farmers are, eh? This is the thing with financial markets. People think that they just, you know, some rich hoity-toity English guy pulled a financial market out of his colon when he was sitting in a coffee shop in London back in 1712 or something. No, that's not what happened. No, there was farmers, you know, and there's seasonal problems with selling crops. So they developed systems for selling into those markets and managing their risks. And then people took that template and they thought, I need to sell insurance, but there's no fucking way I'm going to be able to pay for every house in San Francisco when it falls into the sea after the earthquake just from the premiums from those people living in those houses in San Francisco. Because if that was the way of things, they wouldn't pay me at all. They'd just get together, chuck the money in a big pot and pay for their own houses. So they need to make money somewhere else. Plus, it's a competitive environment with other insurance companies. So they create these financial markets where they can go long or short and they can hedge against one risk or the other, and they can take that difference, and that's the cost of your insurance contract, because there is money, because they created this market, and that's the way finance works, because smart people put economics to work. And then other people come along, cynics that use these mechanisms to abuse ignorant people, and that's why we're here, to beat those bastards down. And we know exactly about the respect farmers and ranchers deserve, working hard, doing a hard job every day, without a day off, without a choice in the matter, or everything dies, their family loses their money and their business is gone. They're the real hard workers that created so many of these sophisticated, complicated financial markets that people now walk along with suits swanning around, wearing shirts like this one, driving fancy cars, acting like a bunch of fucking knobs, thinking they're the masters of the universe. When this thing was invented for real people, and the truth is, if you know why it was invented, the ways it works and how to exploit it, then you can bring it back to the way it was supposed to be. Don't know if MULN are the company for that, but we're looking at them now anyway on the weekly time frame. This is a disastrous downtrend. In order to get here, they've managed to spend a lot of money getting the share price to these lows. These are consecutive lows that are much lower than every previous one, and they come with lower highs. But that may present a massive opportunity. May present an opportunity. So there's like huge bullish divergence there. It's the weekly time frame. It's massive downtrend. There's the daily time frame where you've got huge bullish divergence there. Huge bullish divergence. Yeah, beat the bestest. Yo, Jumping Jabberwocky, how's it going? My friend, how you doing? Stop giving me the wrong click. Oh, go away, wrong click. Be the bestest. Thanks for today and thanks for the last 2 years. Thank you, Jumper Jabberwocky. 22 months. Boom. That was what I missed before. Guitar outside. 20 months. Spider Monkey. Ring the bell. Tradespotting. Bing, bing, bong. Price is wrong. Never giving up on us. You're the best, Jamie. Sammy, yo. Freaking 19 months, 20 months, 22 months. Be like those folks. Right. So, we're looking at MULN. We've got Prestinated there. This is amazing, right? I've got to go because I've been phoned by somebody. I'm supposed to be already going and doing that thing. But so what? They'll just wait because, you know, they're lucky I'm meeting them anyway. So, you've got this downward sloping trend. You've got those lows. You've got this divergence. You're in the bearish control zone. That's brutal. And it doesn't look amazing yet. 4 hour time frame. You're just peeking out of that bearish control zone. Good to see. Having found some... you know, more bullish divergence, une, deux, trois, right? Number of touches of bullish divergence there. Is it enough to simply confirm that since price action broke below this important level of support that it is still bearish with all of this horrible rank divergence there? Is that just confirmation that this is indeed downtrend? Or is it that opportunity that people are looking for? Here's the downward sloping diagonal. here's this downward sloping support. That's a broadening formation, and you know, if you are to break to the top side at these levels, then you could have an outsized move, you know, one of these big strong moves. At the point you've had those big strong moves, you were at the low on the RSI. Here you were at, again, at a low, and subsequently and most recently another one. That most recent one came with, on that 4-hour time frame, a bullish candle. It wasn't yet a bullish engulfing candle, and the wick that formed the rejection only managed to push into a gap, but you did close higher than the previous body close and the open lower than the previous body open, so not bad, though not a bullish engulfing. You don't have a V-shaped recovery here. You had gaps and stronger moves to the top side previously. In those moments of those gaps, you were moving out of the bearish control zone here, moving out of the bearish control zone here, moving out of it here, and you haven't yet done it now, right? So you have a bullish control zone, if you're a bearish control zone. If price action on the 4-hour moves out of it, on the last 3 occasions, that's represented the oscillation move to the top side. That top side move has been arrested by this downward sloping resistance across these 2 peaks. If you want to make it real, you'd have to give it 3. That would be the way you'd find it then, targeting a 50 simple period moving average at 225. That's the outsized move from 143. Markets are open up 2.13% today already. On the 1-hour time frame, you can see you've pushed out to, like, you've managed to hold the top side of that bearish control zone. You've got a little bit of a gap below it. Ignore that for now. Look at the resistance looking left. You're already at it. If you make it from here, stop where your entry is, and that on a retracement having pushed higher already in at around price action about 147 might give you a trade up to around 156. If it starts breaking 156, I would ignore that prior high because you've put in a higher low, higher low, higher high. It might be trying for a higher high. You break 156, 157, and the 50 simple on the 1-hour time frame, that be looks at that trade is on, and you might be looking for it to come up and test the 200 period moving average and that $2, $220. If it go down to the 15-minute time frame, you've got the 50 simple. It's pulling back to support on it now. That's one opportunity. Other one, like right now, they're at 141. The next one is at 1.39. If that doesn't hold and the market's pushed down, you want to be having your stop in, and you don't need it any lower than 136 on this thing. If that's a good opportunity, it'll be shown with a move back above 156. So it might well be that your entry is very close there. That gives you the risk of going towards the gap and eating that. A stop would have to be in around 136, so anywhere as close as you can get to that is better for your entry, and maybe that means scaling in and only taking some of the position, not getting everything you want, and then it moving to the top side and you just being happy with you got, or maybe it all comes down, crushes that and takes that stop out, so you'd need to have it so you don't lose too much. I think this trade would be first on when you see it move above 147, confirmed above 156, the targets being $2 then afterwards, and 220 downward sloping resistance. That's what it looks like on MULN short term. Overall, it's a staggeringly difficult downtrend that suggests the company is going to need to raise money, dilute shareholders, and unfortunately then take a little bit longer in order to achieve those stellar results that everyone's looking for from MULN. But if they've sold 250 vehicles, you know, there's an awful lot of opportunity here when they start gearing up. Maybe they have got a level of production that'll come that's much higher than that and start making real moves. We'll see. It's a downtrend. It's hard to argue against the fact it's a downtrend, and as traders we seek continuation and look for continuation. I want to be dead excited about this because I know there's a big group of people who trade MULN, who trade it all the time, who look at MULN, who really believe in MULN and care about it, and I want to appeal to them and say I can help you with the best possible advice I can. I'll do it and I'll try, and I don't actually have a bias or opinion myself on the thing, but I can't get hyped about something it's in such a strong downtrend, like because of the danger it presents to people who are watching along and not necessarily a good trader, right? Especially with the social media buzz and whatnot. But there are opportunities, right? If this thing is in some sort of a tightening formation here and it's trying to break up and you're looking for big moves, like, and it's true that this is the liquidity shows that it's possible. You'd easily get these sort of things and then the target at $4, right? So if this formation here is a tightening formation and we are in a bullish formation here, if this is a reversal as we see on the divergence and the low time frames and it makes a move that tests the resistance, not necessarily change market structure, then it could be $2, $2.20, $4 if it gets really exciting. And because it's MULN, the short interest will be high. That's the opportunity. Boom, boom, boom. Because maybe make these explodey moves. 4 hour moving out of the bearish control zone. That's what to look for on the 15 minutes. maybe you're looking for it in the bullish control zone, testing that 200 period moving average and the 156 trade on to the top side. I can tell you that every profit target that I've mentioned it reaches, the risk level increases exponentially, and the later you wait to take the trade in that sense, the greater the chance your stop will get hit. Also, the closer your stop will need to be to your entry. So that's advice on MULN, and I think I've covered that thing there. Sammy Yo, thank you so much, Sammy Yo, for donating to the show today. It's really appreciated. It's great to see you. You're appreciated. Nobody ever needs to apologize to me. You know, you never need to apologize to me for not being here, for missing things. Every minute you're here, I appreciate it. And nobody that's here lets me down, that's for sure. And I aim to never let you guys down. Thanks, Sammy Yo. Thanks, Guitar the Fiver. Cheers, buddy. Hope you have a good day, mate. Prez, $50. Thanks so much. And for the information on MULN. It was great to have that to look at. Cheers, Kieran, for kicking everything off. That's appreciated. Thank you, buddy. We also had Schwartz. I sent Discord. Can you check after reading? You betcha, Schwartz. I read it this morning there about solar panels and the chat you were having. I thought it was interesting. I wondered about the terms of that guarantee. Is it underwritten by anybody else, or is it only the provider of those? And then I wondered about other details too. Is it like a scheme via local authorities, and is it like at all related to the government or your local authority, local government area? Are those things related? Because when it's here, there's other provisions built in. But I will get back to it. I looked at it and thought that's a big message, and it's going to be hard to write a good, quick response. So I thought I'd take the time with it. Same with Nick's message. I saw it, Nick. I responded to it at the time and said I'll need to take a little bit longer to look at this with regards to the big picture commercial real estate and when we might see moves there. But I will be trying to make a good answer to that too, Nick. And a couple of other people have sent a message recently. You know who you are because I've responded, and I will get through. I will get back to you the best possible I can. Schwartz, you didn't need to send a nation. That's really appreciated. Thanks, mate. Cheers. Stop pinking my wrong bonking. Frickin' thingy-me-jig. Cheers, Schwartz. And then Kieran, yeah, for Kavana, thanks so much. And everybody who put in other messages and your anniversaries. It's great. Thanks so much for the support. It's really brilliant. I'll do it today, Schwartz. I'll try my best. Thanks, Eeks. Thanks, Samuel. Thanks, Kitties. Thanks, Diff and Freeze. Cheers, Menor. Thanks, Prez. Hope that helped on MULN. I'll happy to look at again. Yo, Jordan. Thanks. And I didn't see everyone's name. Thanks for being here, Dad. Hope you're well. See you later. Right. Freeze. Wiki Wilkes. I think I got everyone. Thanks, everybody. Really appreciated. Can't tell you how much it means to me. If there's anything you want to see on the market update shows, I've got one out. It's got information about Disney, how the CPI data is likely to be digested, the important factors within that CPI data, and whether or not we could consider that secondary inflation and or just the natural kickback in these secondary, tertiary markets that, I mean, it's secondary inflation and it's fucked and whatever, but like, you know, let's pretend it isn't. And hey, so let's get in it, right? The CPI data, like, I mean, you can see it there on the video yourself. People have accepted it as to be positive because the core inflation might go down, which obviously, like, this is what the Fed are actually looking at. They don't care about the little itty bitsy things that make the headlines in the news. They're looking at the core inflation year on year, and you can see that it's probably coming down. So this is why people think the rates will come down. But what they're not actually seeing is that, no, the Fed's policies have now got to the stage where they're the things causing inflation in the rental market, in the used car market. And the reason that the Fed is doing that, to put the rates up, is because they're trying to bring prices down, but it's causing prices to go up. And this is the problem, right? Is that they printed too much money in the first instance. So in order to make it so that that money goes into the economy without causing structural change, it needs to dilute the value of money. It just does, right? And there was more money printed than there's ever been before. So that's a big you know, so any policy they come in to mitigate that, and it'll mean that you're paying for it, not the governments, because the governments, they have to fight each other. They're not mortal. They'll keep lasting long beyond our lifetime. So we're the ones that have to pay for this. And then the only way you can ever absorb those costs is by working for yourself or getting a job that's so well paid that it's either crucial to society, so good on you, or it's exploitative. And in which case, you know, that's the only way to make it nowadays. It's either scam or do something that's so fucking important and so crucially that everyone should be doing it. And if you are doing it, you'll have no time for yourself and it'll destroy your psyche. And so life is on Earth is like harder than it's ever been before. The development index, human development index, going down for the first time in history. Human beings are living shorter lives, more unhealthy lives with less money and less they can afford. At the same time, people say 50 million people have been living out of poverty. That's because they changed the terms of what are poverty. The people who determine whether you're living in poverty, that's never been decided by anyone living in poverty. They never go and ask the Africans. They never go and ask, you know, the poor people in the 70s in China, the people in 50s in America, the people in, you know, they never go and ask after the Second World, oh, what's it like, you know, what would you term poverty to be? Well, you know, you've seen Billy Elliot, right? If you can burn your fucking piano and go and play out in a frozen cold street, then some poor people are happy. You know, so it's just not good enough, right? The whole fucking thing's not good enough. And anyway. So it's the start. I shouldn't do these shows at the start of the day. So thank you very much for watching the Tradespotting show. It's really appreciated. Really, really appreciated. I couldn't do it without an audience. Well, I could, but it would be even more ridiculous than it already is. Thank you very much. Thanks, everybody. Check out the live stream. If you've got anything you'd like me to take a look at, I'll happily do so and maybe even make a wee video on it for you or get to it later.